All right, I got something that I'm super excited I want to tell you guys about how to pay no taxes and at the same time to acquire an investment property that cash flows and doesn't cost you anything at all. No down payment. Okay. If someone told me this, I would be like, what are you talking about? This is insane. There's no way that this is true. However, it is true, and I'm going to tell you how. And it doesn't even matter if you own a business or if you even have real estate. In fact, if you just have a regular W-2 job, I mean, you just get a regular paycheck, you can eliminate all of your taxable income and pay no federal taxes. Okay, now how is this possible? Well, let me tell you. Let me walk you through the plan, the strategy, how this works. Okay, so first of all, you have to understand the difference between passive income and active income. Okay, so normally the job that you work, right, whether you have a business or you get W-2, income that you work for, it's active income. Okay, it's a different category than passive income. Passive income would be like dividends you get, real estate investments that you have, like things that are passive, right? And so what normally happens is that if you take a loss on passive income, it cannot subtract from your active income. It can only subtract from passive income. So for example, if you lose a bunch of money in the stock market, it's too bad. It's not gonna reduce your taxes. I mean, it'll reduce your taxes against any gains you made in the stock market, but it's not gonna reduce your taxes against your income, right? That's just unfortunately how it works. Okay, because it's a passive investment, right? So now, with that said, if you can have an active investment loss that is equal to or greater than your income, then you would pay no day, would make your tax liability zero. So let's say that you have a job and you're making $100,000 a year. Okay, well, if you have $100,000 worth of loss, okay, on paper, then you would pay zero taxes on that. It would be effectively your income is zero. Okay, so that's what we're going to do now, and we're going to acquire property. Now, the way that we're going to do this is with short-term rental law. Okay, that's passed, so that it makes it so that essentially, if you spend 100 hours in a year and your short-term rental business, okay, it's qualified as an actual business, and now any losses that you take from that business are active losses, and they can offset your income. Okay, so we got that part done. All right, so now you might be saying, well, how do I do this? How do I get a short-term rental business, and why would I want to get one that has a loss? Well, that's where a very important tax loophole comes into play, which is called depreciation. Depreciation has been used by a lot of people to create a lot of wealth. Okay, and so what depreciation is essentially a loss that you're able to take on a thing. It could be equipment, it could be a house, it could be anything that is some percentage value of that thing. So in real estate, okay, for example, in residential real estate, if you buy a house, you can typically take depreciation on that if it's an investment property over 27.5 years, meaning that you can take the value of that property and divide it by 27.5, and that's how much it's going to be as a loss every year. Now, the rationale behind this is that the structure gets damaged. What's the life of a house? They say 27.5 years. For a commercial property, it's like 30 years or 40 years. So that's kind of the idea behind it. And if, for example, even if in your business, right, if you get a piece of equipment, okay, let's say that you buy a computer system, manufacturing system, something like that, it might have a lifespan of 10 years, and so it would be you wouldn't take it as an expense fully in the first year that you bought it. Instead, you would have to actually take it over 10 years. Okay, now, what's interesting, what's happened recently is that when Trump was in office, he created this bill, or he basically got this bill passed that was this bonus depreciation. Okay, so normally, let's say that you had something on a 10-year depreciation schedule, you'd have to take that divided by 10, so for 10 years you would take that depreciation. Okay, but he made it so that in certain instances that you could take 100% of depreciation, and then the next year it would be 80%, and then 60%. And right now we're in a year where it's at 80%, I believe. Okay, So what that means is that if you had depreciation for a 10-year schedule, you could take it all, like or basically 80% of it this year. Okay, now let's get into where we're going with the strategy. So all that has to be done is that you find a short-term rental. Okay, so what I mean by that is a property that you would Airbnb out. So let's say that you have a property that is $1 million. Okay, and you buy this property. Okay, you Airbnb it out, so you're making money on this. Okay, and then what you're going to do is what is called a cost segregation study. Okay, so normally if you bought, let's say, a rental property, all right, even if you're doing Airbnb on it, your depreciation schedule on that is going to be that 27 and a half years, right? Or 30 to 40 years if it's commercial, right? Depending on, it can depend on how the characteristics of the property. But let's just, for simplistic sake, say that it's going to be 27 and a half years. Okay. Now, you do a cost segregation study, and what they do is they say, all right, of this property, let's say it's an Airbnb property, right? So it's got furniture in it, it's got all this stuff. I'm going to look at all of the components of this property, and instead of just getting a 27 and a half year depreciation schedule, what I'm going to do is I'm going to say, okay, the refrigerator, that's going to be gone in 3 years, or it has a 10-year lifespan, and and the roof is this, and the furniture is this, and so basically you're going to segregate it out to figure out what is the actual depreciation of each element in it. Okay, and then what will happen is that you're going to have a lot of things that are going to be on a 10-year timeline. So maybe buy the $1 million house, okay, and we get maybe 300,000 of that is on a shorter depreciation schedule, like the 10-year, that qualifies for the bonus depreciation. So what does that mean? So that means that, let's say for simplistic purposes, you have $300,000 worth of bonus depreciation that you can take. Well, that means that you can take that directly off of your income. Okay. Now, if you're making like $100,000 or $200,000 a year, it's not hard to buy a property where you can depreciate enough money to completely wipe out that tax burden. So whatever you're paying in taxes, you would pay zero. Now, you can use this money that you would have paid to taxes, instead of paying it to Uncle Sam, you can use it as a down payment on this property. Okay. Or if you have some creative financing situations, which I've been privy to, which I'll tell you about a little bit later, you could potentially even do this with 100% finance, where you don't have to put any money into it. You just make money from buying a property that ends up cash flowing. Okay? So that's basically how this works. And it's totally legitimate. I've checked everything out. I've run this through my CPA, who also agrees, right? Believe me, I've been doing real estate investment for the last over 20 years, 24 years, okay? And actually 25 years. And I understand real estate tax law pretty well, because I've been doing this for a long time, and I'm familiar with all the loopholes. This checks out. This is legitimate. This is just crazy. This is the best investment opportunity I have ever seen in my life, period. There is nothing better than this, aside from buying Bitcoin when it was $5. Okay, if you would have known that. But this is one that you can know, right? So, just to summarize, how does this work? You acquire a short-term rental. You do a cost segregation study on this. You get a bunch of depreciable value using the bonus depreciation. You put in 100 hours of time on this endeavor, managing this property, whatever, in a year, which qualifies you to be an active investor in this, right? So it becomes active income, and then it gets subtracted when you do your taxes from your income, period. And you're going to save whatever you would have paid in federal taxes on that. And you've got a property that is going to cash flow and make you maybe $500,000 a month. Right now, if you're interested in doing this, and finding out the exact details of exactly how to do this. And I've actually got a company that I'm working with that can kind of set up these deals for you, like to make it so that you don't even have to pick the property. You don't have to find the property. You could pick it from them. That the financing is set up for you already. That you can get 100% financing on it, and maybe even get some money back from this. Okay, and they can do the cost segregation study for you, and manage the property, the Airbnb, for very cheap costs. Okay, if you want to know all of this information, I'm going to tell you what to do. All right, listen up. Go to Instagram and DM me Freedom. Actually, no, don't DM me Freedom. DM me YouTube. All right? DM me the word YouTube on Instagram. Now, what's going to happen from there is someone who answers my messages will get back to you. Okay, I look at some of the messages too, but you probably won't talk to me right away. Okay, but eventually, if this works out, if this is something that you want to do, and you want to get enrolled in my program where I teach you how to do this and how to get passive income, how to build a business, how to basically become financially free while you're still young. If you're not young, you can still do this, but then you'll get in contact with me, and I've got a private coaching and mentoring system that we can talk about. But think about this, right? If you're interested in this, and who is this for? Anyone who's making any kind of income that's decent, right? If you're only making like a very small amount of money, this is probably not for you, because it's not going to make much of a difference, okay? And like the fees of trying to acquire property will probably cost you more than the tax savings that you're going to make. But if you are making, I would say $70,000 a year or more, this is probably going to save you a significant amount of money, thousands of dollars, right? So for me personally, I'm doing this myself, okay? I'm working on a deal right now. It's going to save me probably $100,000 in taxes, if not more, $150,000 in taxes. That's just free money that I'm going to be getting and acquiring more property. So if you're interested, like I said, DM me on Instagram the word YouTube. If you don't use Instagram, you can shoot me an email, john@bulldogmindset.com, and we can talk about it. But I prefer if you DM me, because I have guys that will answer questions for you and sort of see if you are a good fit for this or not. And again, I know this sounds really fishy, okay, but it's not. I promise you, okay. There's no strings attached to this, okay. I do have a financial freedom program that we'll be talking about to see if you're a good fit for. That is why I'm making this video, full disclosure, okay. But even if you didn't sign up for my program, you could still do exactly what I'm saying. Like but if you do sign up for it, I will show you step by step and guide you through this and help you to do this and make sure that you're hooked up with the right people to make this super smooth and super easy to do. Because you might not know how to acquire property and how to set up an Airbnb and how to do a cost segregation study and how to tell your CPA about this on the taxes and do all that stuff. But I do know how to do that stuff, and I know guys that can help you to do all of those pieces as well. So that's why I'm offering this to you. If you have any questions about it, contact me on Instagram. Like I said, you can shoot me an email, or you can leave a comment down below. Don't miss this opportunity, because next year it drops down from 80% to 60%, and then 40%, and then it disappears. Okay, altogether. So don't miss this opportunity. Like I said, it is too good to be true, but it actually is true. I have a bunch of my friends, my closest friends, some of my coaching clients that I'm working with doing this. All right, I haven't revealed it to everyone yet at this point, but if you're interested in this at all, if you want to save a bunch of money on your taxes, trust me, jump on this right now. DM me on Instagram. Talk to you later.